hang of it. We want to bring in our guest host for the hour, entrepreneur and investor Glen Tullman. He is the former CEO of healthcare IT provider Allscripts. He is currently the managing partner of 7wire Ventures. It's a firm that provides funding and guidance to companies and entrepreneurs in healthcare and education and in energy-related industries. Glen, I wonder, do you use Bitcoin, or do any of your companies interact with Bitcoin in any way?
Well, we don't use Bitcoin at this point in any of the companies, but I think it's a great idea for the post office. You know, whether it's Sunday deliveries or whether it's Bitcoin, they do need to become relevant in some way. And their locations are all over in underserved areas and the like. So to the extent that they could become relevant, I don't know if Bitcoin is the way to do it, but I do think it's a good way to become relevant.
There was an interesting piece by Mark Andreessen recently in the New York Times where he defended Bitcoin. Now, to be fair, the venture capitalist, he has invested in Bitcoin and in Bitcoin-related ventures. But this is what he said about the whole so-called unbanked situation. He said, even here in the United States, because he was talking about the international situation as well, a long-recognized problem is the extremely high fees that the unbanked pay for even basic financial services. So one of the defenses he made was that this is a low-cost way for people to get banking. But people have criticized him and said, well, actually, Bitcoin is more of an elitist situation. It's not really for the unbanked. But do you think it is a viable alternative?
Well, I think there's no question that people are going to do more and more in a mobile platform off their phone. And any kind of currency that allows them to electronically interact with, not from a cash or checking standpoint, is going to help the underserved. So I think that's a positive. Again, right now, Bitcoin wouldn't be something that you would say was used by the lower segment of the economy. I think it's a high-end play right now. But could it be? I think there's opportunity there.
All right, I want to talk more about things affecting Washington, like the post office and its deficits. One of them, of course, is Ben Bernanke. His 8-year tenure as Fed chairman, it ended yesterday. And today, we learned he'll join the Brookings Institution as a distinguished fellow in residence. Washington correspondent Phil Mattingly is here in New York with us right now. Phil, I mean, this is like, talk about revolving door. I mean, this was really quick. Yesterday is his last day. Today he joins Brookings.
That's right.
Is that unusual that it's the speed here?
You know, it's not like he went to a fund or something like that. So it's not as bad, I guess you could say, as some members of Congress who are leaving to go lobby or something like that on an issue that they care about right after they walk out of office. Look, the read from the Brookings guys is this. They want to give him a place to serve in residency where he can really take the time, work on his book, not have to, go check markets every 5 minutes, every 10 minutes, and really have a place not only to do his writing, but also to have resources within Brookings to do things. And I think they feel like this is a great spot for him, and he obviously agrees.
Is this a place from where he can give speeches and keynote speeches and make hundreds of thousands of dollars?
I think it's safe to assume that he will probably be paid for his time going forward. You're not going to walk out of government and not see some type of up in your paycheck.
Even Ben Bernanke.
Glenn, you actually began your career in Washington, right? I mean...
I did. And by the way, I don't think it's bad that he's going to actually give speeches. I think a lot of people would like to hear his expertise and what he's doing. So I don't think we should decry the fact that people who've been in government service and fundamentally been underpaid relative to the rest of the market go out and do that. Whether it's a politician, a senator, or a congressman doing it, I agree with you. That's a little different story.
Yeah, but I think there's also value, too, in Ben Bernanke not having to be so careful with what he has to say from here on out. His speeches, him being able to speak publicly without being terrified of crashing a market with 1 or 2 misstatements, that's valuable.
Well, the question is, will he use that liberty, right? I'm very curious to see if we will get a more frank Ben Bernanke. He doesn't strike one as naturally much of a risk taker. But who knows? Maybe he will stretch himself a little bit.
And if he does, what does that mean for Janet Yellen? Because no matter what happens, she's left to clean up the Fed's mess, right? She's the one who has to unwind quantitative easing. We've already begun the tapering, but then what about the whole normalization of interest rates?
Right. Well, and he has to be careful not to undercut her because, everybody's going to be looking to her pronouncements, and to the extent that he is a shadow in the overall policy making, that's going to be a challenge for her.
Is she chairman or chairwoman or chair?
She's gone with chair. She decided not to go with chairman or chairwoman. She has informed the Fed staff that she will be going with chair.
Chair Janet Yellen.
Now, something else that I know you're watching today is Jack Lew, once again, has given his dire warning about the debt ceiling that the funding is, even though the deadline is February 7th, I believe, the extraordinary measures that can be employed by Treasury are only going to go through the end of the month. So Congress has to act.
That's right. It's a day that ends in Y, so Congress is threatening to go over the debt ceiling, basically what we're dealing with. Here's an interesting thing to watch this time around. Congress is used to, he sets a deadline, and they've got more than a month, 2 months with extraordinary measures. Because of tax refunds, the cash outflows from Treasury right now do not support extraordinary measures for the usual amount of time. That's why end of February is the drop-dead date. According to Jack Lew today, Congress doesn't have the time to dilly-dally right now. They have to do something and do something fast.
You know, Glenn, your firm kind of tries to find creative solutions to persistent problems. And what could be a more persistent problem than the debt ceiling and Washington more broadly? I mean, I'm curious what your take is on, you know, the broad question. I mean, how do you fix Washington? How do you fix the way things are done?
Well, first, I'd say that we're focused on less complicated issues like healthcare and education. But that said, the debt ceiling, I think there's a fundamental problem in Washington, and that is it used to be that there was cooperation when these kinds of issues came about, and that's just not the case anymore. You have really three parties. You have the Tea Party, the Democrats, and the Republicans, and all of them can't seem to get a line there. So I think there's a challenge.
Last time we came up against the debt ceiling and also the fiscal cliff, a lot of businessmen, people in Silicon Valley, came out and urged the government to do something. Does that help or hinder the process?
Well, I think that at the end of the day, we have to do business as a country. And when the rest of the world starts to get destabilized because Washington can't act, that's not good for anyone. It's not good for the rest of the world. It's not good for the U.S. And I think the business of Washington has to be to get the fundamentals done and then allow our thriving economy, our entrepreneurial economy, to do the rest.
Well, there seemed to be progress when we had the budget agreement, right? Everyone sort of heralded that potentially as a turning point,
right?
Right. But then you need to have, you can't just have one thing as the turning point. Then you have to have things turn and change
is too busy patting
the second time around. So it'll be really interesting to see how this debt ceiling debate turns out.
Yeah, it will. I think for perspective's sake, you only have really House Republicans who are considering making this a fight. And even they, behind closed doors, when I talk to aides, acknowledge that this isn't going to be a fight. They're not going to push it to the brink. However, they have to have some kind of fight. This is an election year. They have to bring something back to their district.
They have to show a fight, even if it's not a real fight.
Eventually, Speaker John Boehner is
like the WWE.
That's exactly right. You're going to have to stand on the ropes and yell a little bit. Eventually, Speaker John Boehner is going to pass an increase with a bunch of House Democrats. It's how it always works. But there's going to be a couple weeks here where they try and figure out what to do.
All right, well, we'll see how that all plays out. Phil Mattingly, our White House correspondent in New York. We'll see if you can get back to New York. Otherwise, we'll see you back here tomorrow again. Okay. And also, Glen Tullman is sticking with us for the hour. Street Smart, we'll be back in 2 minutes.
And speaking of safety in football terms, is that a segue?
Absolutely. First 2 points in the Super Bowl.
All right. Okay. I didn't even mean to. The Super Bowl is widely known as the biggest sporting event, of course, of the year. One thing that can put the sport, however, in jeopardy could be safety concerns. So, Glenn, I want to bring you into this. You played football when you were younger. Your son also plays in college. We also want to talk to Lee Hansen. He's owner and founder of Guardian Caps. It makes a one-size-fits-all soft shell cover that goes over helmets. It claims to reduce impacts to the head by up to 33%. Lee, I actually want to start with you here. Can you just describe to us a little bit about how the product works and what kind of adoption you've seen?
Well, the product is very simple. It's all about physics and Young's Modulus. We're a 19-year-old technology company doing things for Boeing Aerospace, Lockheed Martin. We got Atlas V rocket booster materials out there. It's all about Young's Modulus and decelerating the hit and the impact, and it's putting a soft shell on the outside of the helmet, no different than on a car bumper where you put the crush zone in a plastic bumper on the outside of the car. It just slows down the impact and makes it better.
Now, Glenn, I know that you have a son who plays football. You played football in high school and for a bit in college as well. Would you still let your kids play football if they were at the age where they were just starting out, given all the safety concerns with the concussions in the recent years?
Well, I think the concerns with safety are great, and everybody wants to make the sport safer. I think there's tremendous advantages from playing football, from teamwork and team sports in general. So I applaud any efforts to do that. I think, you know, the decision to let our son play college football was really his decision, not ours. But his mother would probably be very thankful for for Lee's company. And
yeah, you're talking to two mothers here of 4 young boys total.
Absolutely.
We're not so crazy about the prospect of, I think I speak for Scarlett, about the prospect of them playing football. But Lee, it's interesting here because a lot of attention has been paid to the NFL's receptiveness or lack thereof in terms of changing things. And I know you have encountered that as well. There's a national organization that sort of offers standardizing and approval of equipment like yours, and they haven't yet offered that approval. I mean, what does that sort of say about the system here that it's difficult to get that done?
Well, it's very frustrating on our end. It's being a scientific company. We've done all the biomechanical testing. We've proven on the field anecdotally that it works for the last 3 years. 21,000 kids are wearing this, and the results are just amazing what they're coming back and telling us. We were just at the AFCA Coaches Conference last week, and Clemson University and South Carolina were all coming up to us and saying, we loved it. We appreciate what you've done for our players. It's working. And it's frustrating on our standpoint where it appears it's more about money than about safety.
More about money than about safety. Glenn, what about the companies that you invest in? You look at disruptive technology and how they can help connect consumers with the stats available out there. Lee's helmet reduces the impact, but is there anything on the horizon where you can start measuring the impact and start looking at it from a more technological point of view?
Well, I think there's a number of companies working on the technology. I think Lee's company, which is great, reduces the risk. And then there's still a risk. It's an impact sport.
Sure.
And so from that perspective, you want to, when someone takes a hard hit, you'd like to understand how hard that hit was, what the impact was, and whether you have to sit that player for a period of time or for the rest of the game. Right now, it's simply how, asking how you feel, and it's an assessment that's very subjective.
Lee, I want to get your thoughts. Do you need the blessings of a professional league like the NHL or the NFL for your product to really take off?
No, not really. Basically, what we need is for the helmet companies to step back and say, we're all about wanting to make it better for the kids and allowing us to be permitted to be used on their helmets. Right now, they put penny hat caps, these just colored caps on top of the helmets. This is no different than a penny cap. It's just got padding on it. In every test that we've done in biomechanical, even the Noxie laboratories up in Tennessee, they've tested it on helmets, and we've passed and improved the severity index on all helmets that we've tested it on. So we just need the helmet companies to say, we permit it to be used on our helmets.
All right, gotcha. Thank you so much, Lee Hansen, owner and founder of Guardian Caps. It's certainly a topic that will not go away, especially after Wes, and I was writing down his name, but I don't know. Wes Welker suffered a concussion after last night's game. He was a Denver Bronco.
And there have been a number of suicides in the last several years of older players who had years of cumulative damage as a result of concussions. Well, Glenn is going to be sticking around with us, and we'll be back in just 2 minutes on Street Smart. Welcome back. I'm Julie Hyman. I'm here with Scarlett Fu and our co-host Glen Tullman. In today's Global Outlook, a gauge of Chinese manufacturing. We talked about this earlier. It fell to a 6-month low in January. Orders slowed. The government has been trying to really cool the economy, rein in excessive credit, and it looks like things are working all too well, which is spooking the rest of the world.
What's interesting here is that we already got indications that Chinese manufacturing was slowing over the last couple of days, and over the weekend we got confirmation of it through an official PMI reading, and yet it caused markets to take another leg lower.
Well, you know how it is, right? When people are feeling sort of tentative, they're feeling concerned, bad news looks worse than it otherwise would.
And one way you're seeing that show up is in the yen strengthening. Dollar yen just fell below 101. It broke through that level, and that, according to a lot of traders and analysts, is why U.S. stocks took another leg lower as well. This is more of a liquidity-driven event, according to Matt Maley over at Miller Tabak, than it is a fundamentally driven sell-off that we're seeing right now. I actually was reading something, Glenn, that I thought would be really interesting for where you stand because of your background in technology and investment. This is from Brad DeLong, who's a UC Berkeley economics professor. He was writing in Project Syndicate, and he talked about Japan's economy and how it's 40% smaller than observers back in the late 1980s confidently predicted. Japan's not a poor country today, but its economic structure, he says, and level of prosperity make it look more like Italy. What we've seen is less R&D investment in high-tech industries, and there's a lot of hoarding of cash. A lot of people question whether the U.S. will turn into Japan. Do you see any signs of that?
I don't see any sign. I mean, Japan has a demographic problem. They have an environmental problem. They have a lack of resources. And the opposite is true, really, here in the U.S. While we have an aging population, we have tremendous immigration. Some would call that a problem. I think of that as a real benefit handled properly. We have great natural resources. Who would have thought that we'd be a net energy exporter?
Sure.
For the next 20, 30, 40 years, depending on who you talk to. And last but not least, our innovation engine continues to outperform in virtually every category. So I think we have to make sure that the government doesn't kill the innovation engine.
I'm always surprised by how little you see of Sony these days really leading the way in anything. I mean, we heard from Nintendo and how the sales of Nintendo Wii U really did not do very well over the holiday season, but it's like the Japanese companies are not on the leading edge of innovation at all.
Well, what's interesting, too, is as you said, you know, if you go back to the 1980s, there were no predictions that it would happen. So you wonder if in the case of the U.S., is there a danger of missing the signs that Japanese sort of economists missed if you go back 20, 30 years?
Well, I think there's no question there's always danger. And, you know, we used to talk about 10-year plans, then it went to 5-year plans. Now we're talking about 3-year plans.
Sure.
And really the rate of technology change paired with the amount of innovation going on, it's really tough to predict what's going to happen. You know, that said, the fundamentals are in place. I'd mention one other category, and that is security and defense, and the U.S. leads there as well.
All right, let's go to the markets right now. It's 26 minutes past the hour, so we're going to check in on the sell-off that's taking place right now. And it seems to continue with about 30 minutes to go before the market closes. The Dow off by 304 points. We talked about the stronger yen being a real driver here for the losses. Glenn, do you pay attention to the yen at all in what you do?
I really don't. I really don't. Again, our focus is what's happening. Our products are worldwide. We have a worldwide market, but we don't watch the money supply.
Well, gold price is also higher by 1.3%, and crude oil down by 0.9%, even with the U.S. Seemingly energy independent.
All right, we'll be right back in just 2 minutes. You're watching Street Smart. I'm Julie Hyman.
And I'm Scarlett Fu. We're just 30 minutes from the closing bell. We're here with our co-host for the hour, Glen Tullman. Glen is known as a pioneer in the healthcare IT industry. He is currently the managing partner of 7wire Ventures, which invests in companies that deliver healthcare information through the phone or the computer. You know, Glen, when we talk about healthcare in the country today, it gets so blown up with the politics of the situation, with Republicans and other critics saying that the government is taking over healthcare. But I know that you contend consumers are really the ones taking over healthcare.
Yeah, I think what we're seeing is it's just the opposite of what most people have said. It's a consumer takeover of healthcare, because if you think about it today, consumers are getting 3 things they've never had before. They're getting information on cost and quality. They're getting to make choices that they never did. And last but not least, they're being handed money in many cases by either the government or by their employers to say, you make the decision. And the way our economy has worked is when you put things in the hands of consumers, they generally make better decisions than any other entities. And if you look at the parts of healthcare today where consumers are driving decisions, there's a higher degree of satisfaction and there's lower cost.
What parts?
Well, as an example, for people who've had LASIK surgery, you know, perfect example. The costs have come down. And were you satisfied?
Life is great. I can wake up in the morning, I can see what time it is.
Well, there you go. So, you know, that's the case. There's plenty of people who are having all kinds of other surgery, and they're saying for convenience, for special services, they'll pay additional dollars because they want choice, they want access. So we think of it as an intelligent, connected health consumer, not a patient. Nobody wants to be a patient, but it's about being a consumer and being treated that way.
But do you still end up with sort of a 2-tiered health system? Because obviously not everyone, even if they have some level of coverage, can get LASIK or can get some of the other elective types of procedures. So even with this additional care that the Affordable Care Act has provided, does that really sort of close the gap?
Well, I think it's all a question of degree. So clearly, more people are entitled to more benefits than ever before. And allowing the market to manage that is going to be the most successful outcome, we believe. Again, more of it's going to, we're seeing not only government changes, but we're also seeing technology changes. So things like mobile access will become more and more important. things like passive monitoring. So you'll wear a device, whether it be a Fitbit or whether it be some other device, that starts to tell you not just how many steps you're taking, but what's going on in your body.
Something else I've been really interested in is how you bring health costs down and increase the effectiveness of healthcare by doing more research, by figuring out what works. And what's astonishing is how little of that has been done historically. I know there are some healthcare systems now that are actually saying, you know, what procedures are being done, how effective are they, at what percentage, what are the costs. And it's sort of astonishing that this is not something, especially in this data-driven age, that hadn't been done more widely.
It's a little more common sense, and you wonder why that hasn't been integrated into the institution of healthcare itself. My point here that I'm concerned about as we turn this into a more consumer-driven healthcare is that you waste a lot of time doing research. I mean, I'm all for looking up all this information myself, but you waste a lot of time, and what you want is for someone to do it for you and to give you the data,
the results. What works.
Exactly, rather than dig up hours and hours of research to come to the conclusion that you probably would have come to anyway.
So one of our new services called Zest Healthcare is all about putting all the information that you would need as a mom, as a dad, or just as a health consumer on a phone. And that includes a care concierge to say, here's where you should go for this ailment, here's the best cost, here's the best quality. Because if you think about it, what other place in our economy don't we know what the quality is? Can you imagine going to the Gap and not knowing what particular pair of pants that you were going to buy cost? Somebody said, we'll get back to you later. It's unthinkable, and yet that's what we have in healthcare, and that's what we need to change.
Well, there are sort of services that exist out there where you grade doctors, right? I mean, but none of them is that widely adopted. I mean, you envision sort of a Yelp for doctors, where you could look it up and see what patients are saying. And those, again, those services do exist, but none of them is the household name quite that. As you say, you rate everything.
And that's what's happening.
Everything.
We're at the very beginning. A lot of people thought electronic health records, where I spent the last 15 years trying to get doctors to use electronic health records and electronic prescriptions, and they thought that was the end. In fact, that was just the beginning of having access. If you remember getting your first computer, it didn't do very much, but then all the apps, now you couldn't live without it. And then the computer moved to a cell phone.
And those doctors were initially pretty resistant as well to the technologizing of healthcare records. How do you convince that group to become less resistant, to start embracing the changes?
Well, I think doctors are very, very intelligent people, and they use technology in every aspect of their life. So do they want that access to information? They're also health consumers as well. And so giving them access to information real time is what everybody wants in healthcare. So imagine a phone that would allow you to not only talk to somebody real time, but schedule an appointment, see what your copay was, see what your deductible was, all of that information. That's what we'll have in the near future, and we really see it coming. And that change is driving every day. You mentioned organizations that are already rating doctors. That's the first step. But you also want to know if you're getting heart surgery, where's the best place in the country to go? This is a lot of money.
How can you not already find this stuff out? That's what's so astonishing to me. I wouldn't know how. I mean,
because it's in someone's interest not to.
Do I Google it? I mean, I wouldn't even know.
Well, and that's the problem. Googling it today, you just don't know where the information is coming from. So I think
the hospital tells me they're the best ones to get the heart.
Exactly. Well, and every hospital wants to do that. The two most important things that we do, healthcare and education, are the two that have benefited the least from technology and that have the least ability to be an open system. And all that's changing now. So we're seeing it happening in healthcare and also in education.
You know, speaking of healthcare, I'm looking at the movers in the Dow Jones Industrial Average, 30 stocks, and only one is higher, and that would be Pfizer. There was a preliminary positive results from a study concerning a drug that fought advanced breast cancer, but otherwise, 29 members of the Dow are falling this morning. This afternoon.
This afternoon. You're used to being in the morning.
Still on morning time.
I should mention all of the groups in the S&P are lower. Telecom services is doing the worst because AT&T has come out with a new plan. It's going to cut the price of some of its family plans, and so now there's concerns about a price war among the phone companies. I mean, that's a specific issue for why it's falling, but there is the broader issue of this concern about the global economy that has been driving down stocks today. We're watching the yen. We've been talking about that all hour. We've been watching gold go higher. People looking for safety. They're finding it, at least where they perceive it to be, in gold, in the yen, in treasuries as well. So we see those yields fall to about a 12-week low.
It'll be interesting to see what happens after the markets close and how Australia opens up, because that will determine whether this sell-off circles the globe once again and continues through this week as well.
Just the cycle, as we are down now about 5.6% year to date on the S&P 500. We'll be right back. That could be pretty pivotal in terms of where we go from here.
It's a big week for economic data. It's also a big week for a lot of tech companies that will be reporting earnings. Our guest host right now is Glen Tullman of 7wire Ventures. We want to play word association with Glen. And Glen, because of tech, let's bring in Bill Gates. When I say Bill Gates, you say?
New leadership.
He needs new leadership.
Yeah.
Badly.
Mm-hmm.
Does he play a role?
I don't think so. I think that they need to go outside and they need to bring new leadership. Microsoft has incredible technology. It's just they haven't really stepped up and acted entrepreneurially for a long time.
And
I
so
think
what does
that's
that
what they need
entail
to do.
in the case of Microsoft? What do they do?
Well, I think that they use the assets that they have to drive a number of different segments. I mean, there's an Xbox in 70 million homes, I think. And the question is, why aren't they using that to deliver healthcare or education? Those would be innovative things that Microsoft could do overnight and become a major player.
So it sounds like they're not focused enough on the consumer. Well, here's a consumer name for you, Radio Shack.
All new commercial on the Super Bowl.
That's what I was going to bring up.
Was it effective?
With all the 80s characters.
It's effective for me. I don't know.
I don't know if it's effective.
Well,
I remember
effective,
the old...
but do you walk into a radio... Effective as a piece of entertainment, right?
Yes.
But does it make you walk into a Radio Shack? That's really the question.
It makes me wonder which Radio Shack near me is still open.
Oh.
They've been shutting stores down. They've been firing a lot of people.
I think it's, you know, you might want to start with a name change.
There we go.
Yes, radio is not exactly cutting edge. Okay, Hillary Clinton.
I think it's going to be fascinating. I think she's demonstrated tremendous leadership as Secretary of State, and I'm anxious to see what happens.
And of course, she was tweeting during the big game last night.
Yeah, taking a dig at Fox.
Yes, she said, you know, it's nice to see somebody else. I'm paraphrasing her 140 characters. There it is. It's so much more fun to watch Fox when it's someone else being blitzed and sacked.
The funny part of that was that someone from her team had to clarify that she was joking. She didn't mean it in seriousness.
They had to clarify that?
Well, you know, these things can get kind of sensitive here.
People are a little too earnest. Speaking of the game, fur coat. Did you see that portion?
I did see the fur coat. Coin toss.
That's when it was, exactly. Joe Namath sporting, speaking of going retro.
I was just going to say, back to his 70s roots, right?
That's not very politically correct, but...
that's a look. Beyonce can pull it off. I don't know if Joe can.
It's fabulous. Would you
Well,
wear
if you
that
recall,
coat?
I would not wear that coat. But there's a lot of coats I wouldn't wear. But if you recall, he flipped the coin too early, and then they had to redo it. And so...
the coat was the jinx.
That could have been. But it made a statement.
It did make a statement. I don't know if it was the right kind.
I don't know what that statement was, but yes, it did.
Okay, final word in word association, David Blaine.
I'm a big fan of David Copperfield.
No, not a David Blaine fan?
That's very diplomatic of you.
I'm just saying I'm a big fan of David Copperfield.
So you do magic yourself. We should, full disclosure, everyone. So David Blaine is definitely one style of magician, and David Copperfield is a very different style of magician. You fall more into the David Copperfield camp, is what you're saying.
You know, I think David has done more for the history of magic, both big magic, small magic. He's an incredible collector, and but I think all magicians are great.
All right.
Again, being a magician diplomat, he doesn't want to break the code.
That's right.
The magician's code.
You and Job in Arrested Development share a certain code. I hate to steer the conversation away from magic, but the stock market could use some magic right now because the losses have accelerated. You could now see the Dow down by almost 300, actually more than 300 points, 321 points. That is good for a 2.1% drop. S&P 500 losing 41 points. Jules, you mentioned earlier, all 10 industry groups are falling right now.
Yes, it's a deep drop indeed. And I keep looking at this year-to-date chart. I mean, we are down almost 6% now for the S&P 500. So people who are calling for a correction, you got it.
And that money is going into gold, and it's going to the Japanese yen and treasuries.
All right, we'll be right back, folks.
Something we'll keep an eye on, certainly, as we head into the close. For now, we're back with our guest host, Glen Tullman, who is an entrepreneur and investor in healthcare, energy industries. He's also behind the startup DigiDo, which makes tablets for some Chicago public school classrooms. So this was a move aimed at disrupting education, which is in sore need of disruption. It's kind of like, you know, moved along without any input from technology, it seems, the last couple of years.
It is. We thought there was a better way to do education. You know, today kids learn through a multimedia kind of effort, and all of their world is about their phones and their video games, and when they go to school, it's just too slow. So we wanted to replace old textbooks with tablets and then move to the phone and then move to the cloud, and that's what DigiDo does.
Well, you know, various education systems are not well known for their large budgets, right? So when you're talking about a transformation like this, it's got to be expensive.
Well, the beauty of it is when technology is properly applied, it gives more benefit and it costs less. And we've all been beneficiaries of that because our phones now are like computers and our computers cost less. So we think that can happen in education. And now, actually more than Chicago, in 12 different states, including Washington, D.C. and other places, we're helping schools and students in those schools get a better education.
The pushback to this is that the U.S. spends so much money per student, yet the grades are not there. Continuously, the U.S. scores below average or right at the average line among countries and you know, of high school seniors. They were not better and more literate in math or in English or in language arts than any other country, despite all the spending. So why should schools continue spending on technology?
Well, I think they haven't really spent on technology. If you look at the number of students in a classroom who actually use technology and their entire class is based on technology, it's very, very few in the U.S. And think about if kids were as excited about education as they are about video games.
All right, Glen Tullman, thank you so much for joining us.
Thank you.
It's been a pleasure to talk with you for the hour. Managing partner of 7wire Ventures. And just a few minutes from the bell, markets continue their decline.
The Dow off by 335 points with 8 minutes to go before the close.